Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Chris Marcus of Arcadia Economics, Gold and Silver Daily Substack, and also arcadiaeconomics.com. By Chris's own admission, his mission is to share what I would want a family member or friend to know about what's coming next before it's too late. Plenty to talk about today. Chris, thank you for taking time out of your day to have a chat.
Robert, it's a pleasure to be here. Thanks so much for inviting me onto your show. And yeah, certainly some interesting things happening in the world, and especially, well, for people who've been following gold and silver for a long time, or for people who are just looking at it now as we see gold continue to set regular or new all-time record highs. I think a lot of the things that we've been looking at, you're finally seeing play out, and we can certainly talk about that today. And but yeah, it's nice time to be here and fascinating time to be following what's happening. I certainly you mentioned before we started recording about how there's a tendency that some of these things can have a little bit of a heavy feel because we see there's certain things happening in the world that probably aren't the way that most people would ideally design or pick it, but it does seem as if we're getting into that next phase finally.
Yes, I'm sure we'll go into that. And Chris, I thought the best place to start would be on one of your recent articles on Substack, where you mentioned that the US retail is a more dominant presence in the silver investment market than most people realize. I thought we'd start there and then look at the Indian market because you made a comment about the Indian market as well. So going back to the US, please do expand on that. What's going on behind the scenes in the silver market?
Sure. And in some ways, this isn't necessarily a new phenomenon, although in the 15 or so years that I've been studying gold and silver, I've not really heard anyone point out before. So, but obviously, in the US, well, in the US, there's a lot of people who have never thought about silver, wouldn't know if a silver bar fell on their foot. But certainly, there's a silver community. There are people who stack, there are gold and silver shops and all that sort of good stuff. So I think people are aware of it, yet I hadn't even really thought of it until recently, especially when I was looking at last year's silver survey. And actually now the new one is out, so we could touch on the data there too. But the idea of investing in silver is largely an American phenomenon, at least at this current time. Now, obviously, there's a long history of silver as money. So, I mean, that has happened historically throughout time quite a bit. But for example, I was just in Argentina last month looking at a gold mine, and it was interesting there where they've had hyperinflation a couple times in the past few decades. People don't say go down and buy a couple rounds of silver or gold. It's not a thing there. And so I was looking at the Silver Institute numbers. Actually, this is last year, noticing how I think in 2023 there were 243 million ounces of silver that went into investment coins and bars, and the US was somewhere around 120 million ounces. So about half of the silver retail market. We'll leave industrial aside for now, which is obviously the bigger component. But I was like, wow, well, we know silver is used everywhere, and obviously industrially it is. But in terms of the silver investment, well, the US is 50% of the market. Now, what we've seen over the past 2 years now, I would say, and maybe some signs of it abating a little bit, is a lot of selling on the retail silver level here in the US. So that means people who have silver and they go to the local coin shop, or you can sell it to places online as well, but a lot of that silver has been getting sold back. So when people are wondering about this divergence between gold and silver, where gold continues to soar and silver is up, but has not been moving at the same pace as gold, well, the most dominant player in the investment market has been a large seller over the past 2 years, and and I don't think most people have really thought of it in that context before. And especially we see the record gold accumulation by central banks. So there, you've had a large new source of buying going into the gold investment market, where what has the dominant trend been by the dominant player in the silver market has been selling. And I think that accounts for a lot of what we've seen in the price divergence, which really has been exacerbated in these past couple of weeks, as I'm guessing you may have seen. Or we see there was one day that gold was up over $100, and at that same moment, silver was down 60 or 70 cents,
Mm.
which I'm guessing, I mean, there's at least until the last couple of weeks, there haven't been all that many days in history when gold has been up $100, let alone of those days where that's been the case, that you would have silver in the opposite direction move as much as it did. So we're seeing a lot of that divergence. And at the end of the day, this is a big part of the reason why is what's happening with the money flows. Is that with the money that the gold that the central banks have been buying, we've seen essentially a return of a monetary premium. Whereas capital is looking for a safe home, now that's going into gold. We have not seen that yet on the silver side, which is not to say that we will not see it. Um, but so far we have not. And when you look at that divergence between the two assets, that's really the big difference right now.
And it's fair to say that's being reflected in the gold silver ratio as well, because a lot of people do like to keep their eye on that. I mean, at the time of recording, it's no just over 100, I believe, it is correct, and that's quite rare in itself. So certainly the way I look at it, I'm sure other people might feel the same, is that they'll look at that ratio. So basically, for X amount, you can buy an ounce of gold, or in this case, 100 ounces of silver. That's screaming that silver is incredibly undervalued at the moment. But and you could touch on this if you want. There are, should we say, some shenanigans in the paper markets that could be suppressing the price of silver at the moment. I don't know if you've got a particular take on that, or something you want to dive into on that matter.
Oh, sure. We used to talk about that quite a bit on the YouTube channel I have. And in fact, one of the things that got our channel some attention early on, we did an interview with one of the former commissioners of the CFTC. This was in 2019, and he made some shocking revelations about JP Morgan's involvement in the market, what he saw. Now, this was before the CFTC, then a year later, fined JP Morgan 920 million for manipulating the market, spoofing it. That was one of the things that I asked Bart about, where on some of these days where we see the prices churning along and then just falls off a cliff, and there are people who write about it and others that have talked about it plenty. And that was what I was reading and studying and saying, at least the way I've come to understand it, is that silver is trading at $30.05, and you nudge it a little bit and then it goes through some stops, and then we keep hearing that. And if you read through the tea leaves on the COT reports, that it's the same banks buying it back lower after they're selling and jamming it lower. And that was the mind blower when he sits there, listens to me ask that question. He's like, "Well, that's a pretty good description. Actually, that's a really good description." And then he just talks about what spoofing is for about 3 or 4 minutes, and then finishes his answer by saying, "The only difference between what you described and what happens now is that now, when this happens, the moves are a lot bigger because there's so much more leverage that is pushing things down." So. Are there times, in fact, if you go back to 2011 when silver was coming back down from $50, there was one day, as was probably, I think maybe like 10 days after the fall from 50, where longer term silver investors will remember well. We just hit above $49. Then on a Sunday night, silver opened $7 lower. And that's the last time we've seen that range since then. Although on about 10 days later, this came out a few years afterwards because Deutsche Bank got fined for spoofing the markets, and they had to release some of their trader transcripts, and at least the ones I've been able to find access to. I mean, some of the stuff was pretty stunning, where there's one day where silver falls $4 and you hear someone like Deutsche Bank Trader A saying to UBS Trader B, let's go smash it together on a day where it falls $4. So does that happen? Yeah, I think it's absolutely happened. At some point, all right, if this is the way the system's set up, I did my years of screaming about that, and then eventually, all right, this is how it works. With that said, aside from what I think should be or the way I think is fair, what is going to happen? Um, and with that said, I think there's a tendency sometimes for any time the silver price is down to just say, well, that's manipulation, and sometimes it probably is. There's also times where the price of things go up and they also go down. And I get it. It's if you see Bitcoin soaring, you see gold soaring, and you're more allocated towards silver, that leaves you feeling where it is. Yet those are the dynamics of how it's set up, whether we like it or not.
Yeah, a lot of things going on behind the scenes. I also think if we're going to give a glimmer of number one hope, but also reality, is that the physical market itself has been in, if I'm not mistaken, it's been in structural deficit for a little while, and it's forecast to continue doing so moving forward. So just applying basic supply and demand in economics, chances are that that should send the price somewhat higher moving forwards just on simple supply and demand.
Well, it is certainly lining up like that. I'll preface this answer with saying that we did have about 2 billion ounces of stockpile back in 1990. And over the 15 years following that, got down to about 500 million. So 1.5 consumed. Then we had some advances in mining technology, and that got back up to about 2 billion ounces. That's in the warehouse inventories, we'll call them, like the COMEX, LBMA term. There's also the silver that is held by retail investors, which I've seen estimates of that around generally 3 billion ounces in retail, another 2 billion ounces in the stockpiles. So 5 billion ounces total. Probably the retail stockpile, I would think, would have to be a bit smaller after the selling we've seen over the past couple of years. Obviously, that's not something that there's actual data on. But we've we've I know some people do or don't believe the numbers that we get in the silver survey, and that's okay. I mean, I've talked to enough different people from enough different angles that I think in the matter of what's an imperfect science, I think they're giving the general picture for the most part, and these are some of the signs that confirm that. Where if you have a deficit, well, where's the silver coming from? And we've been able to see that. At the same time, the market for silver equities is stopped bleeding and gotten off the ground. But I mean, especially, oh, in today's video, I was just looking back at September of 2022. I remember being at the Silver Symposium the day silver dropped low, $18. And if you think it was tough in the silver market, the miners have just gotten thumped. One guy I know is fourth generation, 40-year mining executive. And he's said several times in the past year, this has been the most severe bear market he's seen in his entire career. So where does that leave us with silver? Well, it's not like you have a deficit and all hands are on deck saying, hey, we want to go green. We want to continue AI, electronics, and all the other industrial applications, solar, and build grids everywhere and meet 2050 climate agendas. It's not like everyone's out there with their shovel and their cranes right now. I mean, you have some companies that aren't making it. Uh, Mining cost has gone up quite a bit too. So you're running the deficit. You're seeing the stockpiles come down. The supply is not there. And even if you did have all hands on deck tomorrow, I mean, depending on what stage a project is in, it could be anywhere from 5 to 10 years until you get that silver. So if you were thinking, well, let's say you could play God for the day and say, I'm going to design the ideal conditions to facilitate some sort of shortage or dislocation. They're on track. They're in place right now. And I mentioned what happened back in 1990 to say that, things change. We're in the third quarter. There's still time on the clock, although it's gets harder to see how that will be resolved.
Mhm.
And although actually perhaps maybe the most likely way is that, and this would be more of a short-term resolution than something that would realign the market, but you may not get a shortage, but if people need the silver and all of a sudden, if you really had industries not getting bars, there's a shortage, then the price goes up maybe at $50 and you get, I'm sure there are going to be a bunch of people that are going to be happy to sell there. And we saw what our, I don't know everyone who's watching, if have seen what happened in the cocoa market, where you had pretty stable price for several decades. And then I guess maybe now 2 years ago, they ran into some supply issues that, I mean, it went from like 2,000 a contract to it's been between the 8,000 to 11,000 range. Obviously, there's some differences. Silver you can store, cocoa, there's a bit of a shelf life there. So not exactly the same yet. Can live without cocoa. There's certain things in this world that are hard to do right now without silver, and we'll see. I mean, if you did reach a shortage, I mean, that last part I just described at some point has to happen. I mean, if somebody really needs it, and at $50, well, we don't have supply. At $100, well, we don't have supply. Now, you get to some price where it's only parties that really darn need it at that price. But if we do get to that point, which again, we're not there yet, but it certainly becomes an increasing possibility. And
Yeah.
actually, if I could add one thing on top of that, that's even aside from whatever the Fed's going to do, however the Treasury is going to try and negotiate or come up with some plan to address a government backing the world's reserve currency that is insolvent. The money, I don't think it's possible to grow your way out of that. So someone is going to have to take a loss. I think the bondholders are going to be at the top of that list, but as that gets unraveled, ultimately, I mean, that's what brought me into the whole precious metals world, with seeing what happened in 2008 with the housing collapse, and then certain things that you would think, well, if you have issues with the treasury market, what does that mean for the dollar, and then leading to gold and silver. So once
Yes.
all of that starts getting reconciled, which I think you could say we're starting to see the beginning of now, then might be a little disconcerting and alarming from a life standpoint, but from at least if you're a market historian or an investor and find just understanding markets interesting, I mean, it's going to be wild to see how this gets resolved.
That brings us back to the mission statement that you have on the website as well. And again, I'll repeat it just because. So it's to share what I
I'm
write
cringing a
about
little
in.
bit. That was from like 5 or 8 years ago, and
It,
although I
it,
mean, maybe I'd phrase it a little differently now, but I guess the message inherently is still true. So go ahead.
yeah, it is. I think it's very poignant. It's to, break all these things down so that if we're speaking to a family member or friend, or of course a lot of people that are going to be listening to this or watching the video, to let them know about what's likely coming down the road, and this is how to protect yourselves. This is what you could do. I do think that it is very poignant in in terms of in terms of gold and silver. Let's bring gold back into the equation, because I know that you've written. a piece recently where you looked at why silver is lagging gold, and you focus predominantly on, I think it was central bank inflows. So just go into that a little bit more. There's obviously a lot of central banks buying gold, but really it's only Russia and potentially India that have started to mandate allocating, I think, silver as part of a reserve. That's the way I see it. But please do go into that in a bit more depth if you can, Chris.
Yeah, well, that was interesting. Last year, I believe it was right around the BRICS summit, which was in Kazan, Russia. Think a week or two before, and there was a story that came out from Interfax that mentioned the Russian draft federal budget was out. And in there, they mentioned investing in gold, silver, I think also platinum and palladium and precious stones, which I thought was cool. So nice diversified portfolio they're building up there. And now they did not give amounts or say how much silver they're buying. And I've been checking since then. It doesn't seem like they're in a rush to tell the world what they're doing, which, I'm not surprised by. So don't know how much they're buying again, although that was one of the first times hearing on a government or sovereign or central bank level investment into silver, because again, we've talked about the central banks so far, that has been only gold. Um, so can that change? I mean, I think a lot about how if there's things happening on the gold side now that if you or I had talked to someone about 10 years ago and said, hey, this is what it's going to look like, probably would have seemed a little difficult to imagine. So there's been a big shift in tone that, you and I can sit here talking about it all day, but there's just that way in which, life events unfold. You have banks collapse in 2023. You have these different things that experiences that we go through. And then you get to the point where you start to see it playing out in the market. So um,
Yeah,
we're
yeah,
sitting in the middle of it now.
we really are. It's very interesting times. We were saying this off air, weren't we? It's a lot of interesting times we're sat through. And the thing that I find fascinating is that these are things that are similar, as in similar events have happened before, and yet I think we almost seem to get propagandized or brainwashed into thinking, oh, it's different this time, or and so forth. But in reality, with everything you've just mentioned there about more currency printing more than likely coming down the road because it's happened before. Obviously you were in the eye of the storm, as you say, back in 2008 as well. That when we put all of that together, if we look at an answer to how to protect ourselves, family members, etc., then really it comes down to, in my opinion, it comes down to gold and silver. This is ultimately why we're having, these level of conversations. I don't know if there's anything else to add on to that from a financial point of view.
Yeah, actually, there is something I'd like to add on where something that I've learned in the 15 years I've been doing this, where you can hear all this stuff. It doesn't matter that I'm saying it. I mean, you can see these things that are going on, and if you fall in the camp where it makes sense and the idea of gold and silver makes sense, you can do that. It doesn't have to be an all or nothing equation. And I think there's a tendency, and I don't know, I was doing a show and having an inappropriate allocation to gold and silver. I'm guilty of this too, and so not trying to say critically of anyone else, but just I see it. I've lived it, and I see it with the people I interact with, where it's often like, all right, the whole thing's gonna collapse, and so do I have to put everything in gold and silver? And I don't think that you need to see it that way, or that's not by any means necessary. I remember there was one day I was at home and I was sitting there. Maybe I had like a pile of silver somewhere, but I'm thinking, well, at the end of the day, it's just sitting there.
Hmm.
You know, next week it'll still be just sitting there, and maybe it was somewhat tied to the idea of like get the concept, okay, where if you have cash in a bank is in many cases a good thing to have, yet if you're able to use cash productively or gold and silver productively in a productive business or whatever it may be, there's certainly an advantage to that. And I don't know, maybe it's a tricky situation. I wish I felt more confident in the currency that I didn't feel the need to say, all right, I'm going to take this and hold it in gold and silver. Okay, but that's where we are. Yet within that, all right, even if you think there's going to be a lot of inflation or maybe a lot of disruption to the system, I mean, there's different ways to proceed throughout that. I mean, I'm guessing we're not all going to be dead in 5 years. So if life is going to carry on, that's how I've tried to look at it, saying, all right, maybe some of this stuff is going to be unfortunate or not the easiest, but how can I use that? And whether that's someone starting their own business or investing in, I mean, it seems like the Trump administration is certainly targeting reshoring manufacturing back to the US. We could debate how successful the plan they're using is going to be, but if you think that's going to happen, well, there's investments there, and there's even in turbulent times, obviously, anytime the market crashes, we always find out later, well, there were some people who made generational wealth then because they were prepared for it in advance. And I think that's something that's important for gold and silver investors to also be considering. Now, if you want to put everything in gold and silver after you look at it, and again, everyone's living in a different situation, and that's what's right for you, go for it. I've done that before. I wouldn't necessarily recommend it, yet I just think it's also okay for gold and silver enthusiasts to realize that it doesn't have to be all or nothing. It's good to balance things out and have some diversification in there as well.
Well, thanks for sharing that point. I think that's good to bring almost a semblance of balance rather than having an all or nothing approach. So thank you for sharing that. I know that subscribers will torture me if I don't ask you about mining stocks as well. And now it's up to you if you want to mention anything in particular. It's completely up to you, not necessarily financial recommendations. That caveat being said, obviously a lot of the results from quarter four 2024 and quarter one 2025 have been very good. Not all of them, but most of them have been very, very good. Any particular companies or anything in the mining space that's caught your eye that you think's worth sharing?
Sure. Like you pointed out, we're starting to see some good numbers from some of the miners where, I mean, it's like we had last year, we're like, oh, the miners should be doing all right. You got $2,500 gold here for a couple months. Then a quarter later, it's like, oh, well, I guess they captured 28 for the last couple months. And now I forget how long it's been since we've been above 3,000, but at least, I think probably at least a month. Well, I think, yeah, the reciprocal tariffs were the second, April 2nd. We're in May 13th now, and gold just dipped below 3,000 bucks for a couple hours or a day. Um, so anyway, it's been at least a month and a half, and there's a company that we work with, one of the sponsors on our show, Fortuna Mining, and we had Jorge, who's the CEO, for a live call following their earnings last week. They just reported record free cash flow. A lot of the producers starting to do really well. Gold stocks, the pricing is up, still not still not trading like Nvidia. So
Hmm.
it's a fair amount of frustration on the investing side where it's like, gee, you would have thought with these types of moves that we'd finally be a little beyond where we are now, which on one hand, if you think that it's mispriced, then that can be an opportunity. And I think part of what's going on behind that, I remember someone sent me a bank report a couple weeks back, and they, you saw the table of their gold price forecast, and I forget how far out it was, but maybe a year and 2 or 3 years, they had like a $2,200 gold price. which I was thinking, okay, from the Wall Street, and maybe I'm extrapolating, this is just one report, but I guessing it's not an uncommon thought process across the big banks where I think they're seeing it as gold price went up for a bit, it spiked. Well, there's uncertainty, perhaps similar to what we saw in 2011. Now, I'll be the first to admit I didn't think gold was coming back down from 1900 then, and took about 12 years for me to be right on that one. With that said, I could be wrong this time too, although I just look at the context of the things that are happening in the world, and maybe they'll be right and it'll be 2000 bucks in a couple of years, but I don't think I would not bet on that happening. And I think that's behind some of why you're seeing the miners trade where they are, because I think there's, and certainly in terms of a market where it feels like Lucy pulling the football away from Charlie Brown, there's a degree to which it, I wonder how that would get, like if gold went back down to 2,400, silver went to $24, that would, some ways that would, I mean, it would kill the mining industry to some degree, exacerbate the issues in silver, wouldn't be good for the gold supply either. So lot of moving pieces there, but it's again, I don't want to say it lightly because I know there's some people, especially with the inflation, not having the easiest time already yet. Strictly from that point of being a market observer or participant, I mean, it's fascinating what we're seeing unfold right now.
I think if the gold price and silver price went down to the levels that you've just mentioned, I wouldn't say that's impossible either, because as we've seen, not just for Trump's Liberation Day on the 2nd of April, but as you've alluded to, there's a lot of economic circumstances behind the scene. Values in the S&P 500, etc. Most of them are wildly overvalued. The S&P 500 is what, about 150, 160 points off of where it was back in February. But the point in that being that if there is a bigger recession, then gold and silver will sell off as part of that. That could have impacts, as you've just mentioned there. That could also create a possibly one last massive buying opportunity, because again with QE we've seen this play out before. So I get what you're saying, and it's not impossible for that to happen if it's part of a big broader sell-off. If there's not a big broader sell-off as part of a recession, then I would favor the odds of the price going in an upward position, or the value of the currency being devalued, whatever way you want to look at it.
Yeah, it's a great point, and one I've actually been thinking about. I mentioned before we started recording, I'm writing up a silver report now. And one of the things I talk about in there is, okay, what happens if we do see like a big market sell off, where let's say the stocks start selling off, supply chains get disrupted, economic activity is going down. So on one hand, what is that can do for industrial demand of silver? Sure, you'd have an impact there. On the other hand, what is going to happen to the supply of silver? Well, um, some people may know this, some may not, but about 75% of the silver comes as a byproduct of mining other metals like gold, copper, lead, zinc. Um, so if you have less demand for copper, lead, and zinc, that means those businesses are going to be going down, so you're going to get less silver byproduct. Similarly, now the pure silver miners, I don't know if there are really any pure silver miners left. I mean, most have a mix of gold and silver as well. So, they'll be impacted by the price. But again, two other factors to put in here is A, if the price of silver goes down, so we have that other part where the byproducts, if demand for their metals goes down, that's going to be less supply. If the price of silver goes down, that's going to be less margins, less money that's going into silver, so less from the primary miners as well. And what was the other part of that? Yeah, okay. So, and if you did have a recession, which might add, even Jamie Dimon came out a week or two ago saying recession was his best case. And I think the longer this trade war goes on, I think there's more damage being done to the supply chains and different parts of the economy behind the scenes than most people are aware of. So, certainly at least a growing possibility of a recession. And if that happens, Robert, I will ask you, how do you think, we'll leave aside the Fed, we can guess what they'll do. Let's say you get a severe recession, things really start getting gummed up. How do you think the governments will respond?
From a Okay, so from a generic financial point of view, they will probably print, 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 and print.
The
Then from a
governments, the Fed, both probably going to do some form of stimulus, right?
Absolutely.
So then I think, well, all right, let's say that the US will leave the other countries aside for the moment, but US wants to get money into the economy. All right, what would be something that they would be likely to direct stimulus money towards? Is the green agenda at least on that menu? Now, it's interesting. Trump seems to have a different perspective on a lot of that than, I mean, if Kamala Harris were president today and you had the economy tanking, then even a higher chance of that. Yet, whether it's the US or whether it's other countries, if they're trying to meet their climate goals for 2050, if you get a recession, are they pumping money into sectors that require silver? I would think there's a good chance of that happening. So, anyway, just a few things to think about if we see recession, if we see price move down. And I might also add that if you really see the stock market getting clobbered, in terms of what actually gets people to buy physical gold and silver, the phones for the dealers ring when you have things like bank failures, Nikkei being down 12%. So if we're in a 2008 like environment, I would imagine that would also perhaps reverse a lot of the selling we've seen on the retail level into buying. So a few factors to keep in mind as we move forward here.
It definitely is, and that leads me to sort of my last question. And apologies if it's slightly open-ended. In terms of all the political move or the macroeconomic moving pieces that we've discussed, is there anything that we haven't mentioned or you haven't mentioned that you think people need to be made aware of before we wrap up?
Yes, there is, in fact, because I woke up on a Saturday, I think this was 2 weeks ago. Something happened when Trump went to meet with Putin and Zelensky that seemed to diverge from what we had been hearing. And Trump seemed upset with Putin and mentioned whether we're going to have to do additional banking or sanctions. It was weird the way he phrased it. It was like banking or sanctions. Now, I think most people who are listening probably aware that when Russia went into Ukraine back in 2022, the U.S. kicked them out of the SWIFT system, placed sanctions, froze assets, and not a coincidence that that is really the exact time when the central bank started buying gold. So to hear, I mean, obviously, aside from the fact that if any war goes on longer than another minute is tragic in its own right. But from the investment perspective, and I'm guessing that's not ultimately what ends up happening, but now we have a trade war against the biggest trading partner. Things still weren't good with Russia. You already had last year, in the last couple of years, the BRICS talking nonstop about de-dollarizing, even mentioning on the BRICS Pay website that the proposal for the unit currency, which is what has been talked about, that has the 40% gold backing, they listed it as item under discussion. So it's not just people on the internet reporting or making it up. There's been discussion about this going on behind the scenes. And then, as part of the trade deal with India, now I haven't heard this confirmed by the US side, but the Hindustan Times said they were discussing that to resolve the trade imbalance, that the US could start sending energy and precious metals to balance it out. There was already a large portion of the world that wasn't too thrilled with the system. Then you add these things on, and some of the potential risks. Hopefully, some of them don't happen, like further escalation with Russia. But you're seeing the shift happen now. You're seeing not just people, gold and silver analysts or your investors speculate about the problems with the treasury, but at a time where deficits are getting bigger, now we've had some pretty weak GDP over the past quarter. We're entering that zone where it's not whether you like the treasury or not, but hey, if I'm a country producing oil and we need to store value, are we getting to the point where this like really just effectively is not going to achieve that? And I think we're seeing that play out. That's why the gold price is where it is right now. And I can't imagine that the way things have gone between Trump and China is going to make them say, oh, shit, we should scrap that plan for de-dollarizing. Don't need that now. So that would be the last part to add on, which it's been kind of quiet on the de-dollarization front over the past couple months, especially with everything else that's been going on. Although I would say whether you or I are finding it quiet or not is not necessarily always reflective of what's happening behind closed doors. We don't know exactly, but at least based on what I've seen and heard and read, I don't get the feeling that those plans have been scrapped. And especially after what we've seen these past couple of months, hard to imagine that really changed drastically.
I think watch this space is probably the phrase that I would use to, basically let's just see what happens. Chris, we've covered a lot of ground today. I really appreciate you taking the time out to sit down and explain all of that. I always like to get people the opportunity to say how you can be found. Again, anything you mentioned, any links, I'll put into the post that comes with this podcast as well. But how can people find out more about you? How can people get in touch?
Well, I appreciate that. And I mean, we have the Arcade Economics YouTube channel. There's a website which not as active on, although we did start a Substack. Gee, I guess was that back in October. It's gone quickly since then, although they're a daily written piece, which I've been having fun doing. And I know you've read some of them. So my goal was to give it something daily where it's not. I think there are long pieces that are great. I also know how much email people get and trying to get through a lot of stuff. So I wanted to make it easy to read, sometimes explaining complex concepts, yet simply so that you can get it. You don't have to like really grind through it to get it. And really for someone that I don't know whether they see a shift happening or if they're just interested in gold and silver, but if you wanted a pretty convenient way to stay up to date and have a good feel for what's going on, why it's going on, and what could be coming next. Well, that's what we do at the Substack, which is goldandsilverdaily.substack.com, or you can find us at Arcade Economics on Substack. And yeah, I appreciate you reading and reaching out, and it's really cool platform there that I've enjoyed. So you can find us there.
And as I mentioned, I'll put links to all of that in the post that comes with the podcast as well. Chris, but thank you very much for your time and look forward to catching up later on in the year.
Well, I appreciate that, Robert. Thanks so much for inviting me on your show. It's nice to meet you, and I'll look forward to staying in touch and following this with you in the years ahead.